Welcome back. Final hour session just after 3 p.m. Eastern Time on the 10th of June. Let's get started. Just sent out a message. We've got some inflation data coming tomorrow morning, 8:30 a.m. Eastern Time. And what I see forecast-wise, year over year is expected to go a little bit higher than previous. And we'll see if the market reacts to that in a negative way or the market doesn't really care. U.S. inflation tomorrow morning, PPI, it's CPI tomorrow and PPI on Thursday. Take a look at the markets today. So we had pretty much a chop fest this morning and just higher lows, and higher highs. So all in all, like not a huge move, 0.56, but heading up to the 60-50 handle. I talked about this morning on my levels. We traded this morning. Here is a look at some of my liquidity levels. We traded here this morning, grabbed a nice little gain out of daily profit play. Win another 2 for 2. I think we're 6 for 6 for the week right now. And we are actually heading up to, this first little round of resistance. So, 60-50 offering some resistance today. That's what I said I wanted to stay above. So we ended up taking some trades this morning. Where were those trades this morning? We did 60-60, 60-65. Yeah, we stayed out of the way. And also, market cooperated, went down a little bit. I was actually looking for a broke wing butterfly to maybe trap this thing around 6,000. But I thought, I don't need to overtrade. Just let price be price. This market is likely heading up into this bit of melt up zone. I'm watching this trend line very carefully, depending on, we've got 50 minutes left. And are we going to get to 60-50 today? The level I was watching, these blue lines represent my daily profit play, 60-60 and 59-65. So if we stay less than this blue line, above this blue line, offering some pretty good profits for the entire day. But we still got a nice little winner. I think it was about a 40% winner-ish this morning. Ended up grabbing, a quick 30 cents and 30 cents per contract on the two trades, which 30 out of the initial credit. About a 37.5% winner this morning, which isn't bad considering our typical profit is anywhere between 15 to 25%. So grabbed a little bit more profit this morning, which is good. Market's just continuing to melt up. Take a look at some waterfall income. Let's see. Close out a trade for waterfall income. Pinch point scanner is doing pretty well. I've got a trade up about 23% on Celsius. Let's see here. What else? Trade is up. This one's down a little bit. I'm going to see if is KMI just not cooperating. Let me check the stock here. So KMI dropping. We have some support. I need this thing. What's the expiration? KMI is a July. Son of a bun. Let's see here. I might cut this one off. I paid $286 for it, which means my break even needs to be around 29. Are we going to see? I'm surprised that this thing's going down considering oil is making a pretty bullish run. Well, I guess there's a rejection today. So maybe that's the issue, is a little bit of pullback on oil. I still like oil maybe heading back into the 200 moving average, but I might just cut this thing off. Max risk 286, down about 30%. I might just peel this thing off for a small loser and not let this get worse just in case it doesn't cooperate. So I think I'm going to do that for pinch point. I've got a class at the top of the hour, 4 p.m. Eastern Time. We're doing a master class on pinch point for another live session. So I think this one is worth just bailing on. Taking a small loss, 286, close it down for, let's see if I can get like $2 credit for it. I'm going to change this. Let's go replace this for a $2 credit. Not filling. Let's go $1.99. Try to get as much out of this as I can. 98. Mid price is 96. Hopefully it's not too much lower than that. All right, $1.97. So I'm going to bail on. I'm going to put this in Telegram for pinch point scanner. Take a manageable loss here. So pinch point, trade management update. KMI. Cutting the trade off for small loss. So entry was 286 debit, close $1.97 credit. So that would be 2.86 minus $1.97. net 89. So minus 89 per contract loss. Okay, I'm going to take a small loss there, update the pinch point scanner. That is trade number. Let me go to KMI is trade number 10. And update this one. So $1.97 minus 2.86 divided by 2.86. About a 31% loser. No big deal. Oops. So cutting loss. All right. So cutting that loss, that's fine. KView is up around 27%, looking good. MRK is up about 30%, looking good. Q's waterfall. This is a trade from this week on Monday. Trade here's up 47%. Those are looking good. Starbucks up around 20%, looking good. SoFi up about 5%. Verizon is down 11%. So we'll keep an eye on those. Those can go either way. Celsius up about 28, but almost 30%. So yeah, I think everything else looks good. That was the only one that I saw that was kind of getting up there like 25, 30%. I know we've got some time, but I think it's just going to be too correlated with oil. So I'm going to dump that one. That's updated in Telegram and updated in my tracker for pinch point scanner. Class at the top of the hour. We've already taken 2 winners, 1 loser. We have 18 trades running, 15 now, and trades looking pretty good. So we'll let price do what it does best. Up a little P&L in the day. This little melt up is helping. I actually underestimated my P&L. I was thinking if we were getting up towards all-time highs, I'd probably be close to 290 to 300K. And we're still not quite at all-time highs yet, but we are certainly closer. If I go to a higher time frame here, if the S&P, and this is the broader market, but S&P goes up another 2% or so. Let's say that we get to all-time highs. There's about a 1.87, 1.88% move needed to get back to all-time highs. I think that if you're watching charts, watching price, the cleanest trade right now is don't fight the path of least resistance. This market is clearly melting up. It's running into some pretty serious, just kind of drifted divergence. I'll just call it that. And the reason I say that is if we go to, let me just use this 30-minute chart. Okay, if we use this trend line right here, I'll point this one out. So we use this trend line, connect the dot from there, that low to that low to that low to that low. That trend line looks pretty clean. And on top of that, if you throw this high into this high, is this enough of a resistance area? This does not mean sell this thing. This, you look at this, it's like, I think Chris just drew a rising wedge. Well, I'm drawing a rising wedge, but the market may just go through it. Okay. But I've just asked the question here. Would anybody be surprised if the market goes through the highs and just kind of taps the all-time high only to come back down? I wouldn't be surprised. And if we come back down and we sweep a low, I think we could have a correction into this U.S.-China trade gap. I think we could have some deeper corrections. And being just as somebody that wants to participate in some type of dip or position options and get some cash deployed, I hope we have a pullback. And I know I've said this for weeks now, and I'm a broken record, but I just refuse to aggressively participate at the highs because ultimately when I see that institutions are still on the sidelines or, like lightly, not really even participating compared to the retail crowd, there's a chance that the retail crowd is going to get the pain trade. Yes, the retail crowd overall has been proven right, dip after dip after dip, but there's also that nagging concern, like maybe we're not right. Maybe this is, if you bought it here and you didn't take profit, you could basically end up empty-handed or with nothing to show for it. So I still think when you see the institutional money is just sitting on the sidelines, and that's what I'm trying to find here is, institution versus retail inflows. Let's see if I can find a chart on that. Let's go. Let me see what this is. 6 hours ago. Bank of America institutional clients dump stocks at historical rate. Wow. All right, that's literally 6 hours ago on Yahoo Finance. Let's take a look at this article. So investing.com, latest equity client flow trends. Bank of America analysts reveal a notable divergence in equity flows, institutional selling accelerating versus hedge fund and retail buying. Despite the S&P rising 1.5%, B of A clients were modest net sellers of U.S. equities, driven by single stock sales through ETF saw inflows. Though the ETF saw inflows, selling was primarily fueled by institutional clients who have sold for 5 weeks straight. Wow. Cumulative selling by this group year to date is the largest of any comparable period over since 2017 when normalized by market cap. Hedge funds were buyers for a second week. Private clients were also buyers, have been buyers for 25 of the past 26 weeks. Record buying streak in our history. That's pretty crazy. Corporate client buybacks also accelerated week on week. Were typically seasonal. Divested, staples, financials, communication services. I mean, right now, the sectors that are leading: industrials, financials, basic materials, utilities, right? Those are your leading sectors. I was looking at there's an ag index, like agriculture index. So your soybeans, your wheat, corn. It's like those stocks have actually started to rip aggressively higher, and I think it's just because they've been in bear markets for the last 2-3 years, and instead of putting all the money in Mag 7, a lot of that money is going into stuff that's pretty cheap. So I think we do have a flow into value for 2025. At least we can see it right now. Consumer discretionary saw the biggest inflows. Okay, that's interesting. Versus staples, right? 7 straight weeks of inflows, second recent or the longest recent buying streak of any sector. Let's see here. Exposed client being bigger buyers, smaller sellers, domestic last 6 weeks. Tariffs deglobalization are largely priced in for domestically oriented stocks. ETF-based clients reportedly bought for the first time in 3 weeks. Blend and value ETFs while selling growth ETFs. Interesting. So maybe looking for a little bit lower beta, looking for a little bit more protection, looking to see how this rotation plays out, and we'll see if it can sustain. Yeah, so that's something I'm just watching. What else do we have here? State Street retail versus institutional flows. See if I can find this on. I just want to find a graph to compare. Transcript, path forward, May 2025 institutional investor indicators. Give me a chart, would you? All right, I'm going to take a look. So I'll look at State Street. What else? Market dynamics. That's old. That's old news. It's January. Let's see what else. Yeah, I'll just do some updates. I'll do some research. Okay, so here's the news for tomorrow, 8:30 a.m. Wednesday. CPI numbers. So I've just mentioned this on Monday since we have a forecast. The year-over-year core previous print was 2.8. This news tomorrow is forecasted for a higher print at 2.9. We'll see what happens. Does it print 2.9? Does it print 2.8? Does it print 2.7? Does it print 3.0? I'm gonna call kind of BS on some of these numbers because it's been very accurate the last 3, 4, 5 months of what is forecasted is what the print is, and the market really doesn't overreact to it. So I just wonder if that's going to get thrown off a little bit. Keep an eye on bond prices, keep an eye on the dollar. But 2.8 was previous year-over-year core, which is supposedly between core PCE and core CPI or super core CPI, whatever the heck the Fed's using now. Those are the measures to see what exactly is improving or not improving in the land of inflation. So are we going to see a higher print for year over year? We'll find out. And then your headline CPI previous print was 2.3. It's forecasted for a print tomorrow at 2.5. So between these two, I mean, let's see what the market does. Let's see what price action does. Okay. So I would expect after having 2 very calm days, let's go to the 5-minute chart here. For the most part, price action is pretty calm. Here is Monday. I had a member of my daily profit play that went 12 for 12 yesterday. Just super aggressive on Monday trading. It just killed it. And then today, probably 3 for 3, probably 5 for 5. Markets cooperated pretty nicely through at least until about noon today. So center price around 60.15 stayed there up until about 11:45, 12 p.m. and still came back and retested center at almost 2 p.m. So even from opening bell to 2 p.m., pretty good trading there just for some range trading. Then we had a little bit of a squeak up to the upside of some fresh highs. That 60.50 level is likely going to get tapped tomorrow, and that wouldn't shock me at all. Okay, but again, do I want to be a bear? No, I don't. But what I'm watching is this simple trend line. If this trend line is going to break with a decent move to the downside to take out some of these lows, we certainly know this. This market has been grinding. Now, I wouldn't even say, I guess you can say grinding, but man, this market is just molasses to the upside. I mean, we're talking like this high got taken out by what? It took a week. It took a week. So we went, we had this big move with US and China trade agreement gap, and then it took it all back a week later. And then just this was where the grind started. So it's now 3 weeks in the making of just this consolidation, finally breaking this high after a 2 week delay, and then just slightly higher high, 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 slightly higher high. It's eking out these little tiny fractions of 1% highs. And I wonder if the final, push is going to be something directional. So maybe we have a kind of stronger push to the upside. But does that come back in, tap the all-time highs and then quickly fade? Again, if the trend line is broken, I'm going to pay attention. If the trend line is not broken, then we get further and further away. Then the previous all-time highs would possibly act as support because it would be resistance that's broken. Okay. So would we have this conversation differently if the market was down below this trend line? Yeah. If we broke this trend line and we took out some of these lows, I would say this is maybe a small correction. But most likely a correction to me is going to be like July, August timing as opposed to the end of this month. The only thing I can see correcting this month is I mentioned this this morning in one of my live sessions, 5905. If you write that number down, 5905, and I put this on this chart here for SPX. 5905 is a JP Morgan investment bank call side. And this is basically a trade that's put on every quarter that is kind of used as a quarterly resistance level and a quarterly support level. So if you look back to, we'll go April, May, June. So basically April 1. Let's go back to April 1. I don't know exactly what the option chain looked like, but we all know back in April here, this would have been some pretty disruptive things. We finished the month of March right here. This is Monday the 31st, and then April 1st. So it would have been the close of this candle going out to about a 20 delta. And I find that hard to believe, unless, I don't know, man. Unless this here's my center price. If we had a 20 delta and a 20 delta, I could have swore that going out 90 days would have been way, way higher than 5905. So I'm gonna dig a little bit deeper to make sure like that is in fact what I'm seeing on the big gamma levels for this monthly expiration. So end of the month and end of the quarter all coming on June 30th, and that's going to be a trading day of the Monday. Okay, so CPI this week, Fed on the 18th. One final week of trading, and then we end on the 30th. Then we go into a holiday week, so we're going to have some interruption. Like on the end of the month, 30th, that's Monday. You've got the 1st, 2nd, 3rd, and 4th. That's going to be holiday trading, mostly with Friday being off with a bank holiday. So could make for an interesting week. And the scary part is, not scary part, but what happens in summer trading is markets go low volume. And it doesn't take a lot of money to move the market with as much leverage that's in the system. So it's always kind of those surprise like summer moves that catch a lot of people off guard. So just throwing it out there. I mean, we just need to be checking in, making sure that prices are behaving or nothing wild and crazy is happening. But we clearly have some technical levels to come back and find. We clearly have some highs that the market might be excited about. I do wonder if either this level starts to get people off the sidelines to then buy more at these highs, or if this is a trap for retail and institutions will then be rewarded for some type of correction, and I don't know, maybe they get what they want. So I still hate how uncertain the environment feels. I think any dip I'm interested in buying. I don't think we're necessarily going to crazy lows again, but there could be a lot of things that could disrupt this. I just don't know if it's going to be immediately in 2025, right? I mean, this could be something that gets kicked down the road. We could still have this 90-day pause window in July that disrupts the sentiment, I guess. Bear sentiment is still very high, which is why this pain trade has been up. I mean, everyone that's been crazy bearish, 11 straight weeks on the AAII sentiment report was above like 50% bearish. Now it's still in the 40s. It's still above historical highs. So there's that side. And then there's the S5FI. Yes. Then there's this. I use this as a market breadth indicator and kind of timing a top or a bottom. We had a pretty good reason to sell stocks back in summer 2023. This would have been a nice little peak here. This would have been December 2023 and then July of 2023. This was about a 2% correction, and this ended up being a 10% correction. Doesn't mean anything based on, like what time of year it is, but considering this is June, we're going into June and July, would I be terribly surprised if we're up here, at these highs again on this moving, 50-day moving average market breadth indicator, and all of a sudden we have a correction? I mean, that correction would be pretty nice. So as far as timing that, another thing to look at is don't fight this path of least resistance. If this market is going to be able to grind higher up to these levels, then yeah, sure, I will look at maybe a sell play on the indexes. But this market still has maybe another 17% to go higher. So from 73.61% to over 90%, maybe that's the way to time a bit of a top instead of getting in too early, right? And if you want to go back and check this, the ticker is S5FI, and look at this as a sell opportunity, or at least protecting some profit. So look at this, look at this, look at this. These are all near-term, corrective patterns. It might vary between percentages, but you're going to see some pretty substantial tops in the market, and the same is true for the bottoms. If you were buying the market in here, a lot of these lows were excellent buying times, right? So it works both ways. Yeah, so I do want to keep an eye on this one. Same thing on the Nasdaq, which I have just a couple tickers lower. So here's Nasdaq at 50-day moving average. 85% of Nasdaq stocks are above the 50-day moving average. We have 66% are above the 200 moving average. So do we have some market breadth in here that maybe this thing gets up a little bit higher, maybe the 92 to 93%? Maybe look at something on the Nasdaq. I think they're going to move together. You're going to have S&P and Nasdaq probably moving together. The question is how much of a sell-off do we get? 2 to 3%, little tiny dips, or is it 5% plus? Is it maybe 5 to 10%? We'll find out. Okay, but look at today's price action. Ultimately, the market is up today, just not by much. This has been just kind of a grind fest. Up, down, buy the dip, buy the dip. We might kind of settle right back in where we started, around just the maybe 60-20, 60-15 zone. So we'll see. But kind of taking the march higher, just very slow. And this trend line is what I need to pay the most attention to. If price breaks this trend line, I think we have room to correct. Okay, so try to keep the price action really clean, really simple. If we get further away from the trend line, that just means we're making a directional run up to those all-time highs. Just be careful on how aggressive you get at those all-time highs. Okay, any news on U.S.-China trade talks pushing up or down? From what I see, no. I think that right now, from what I'm seeing timeline-wise, is London should be the meeting point for U.S. and China to talk. We have the Senate is supposed to be voting on the tax bill for the U.S., so hopefully Congress as a whole is getting something in the works / passed by July 4th. So end of this month into the first part of July could make things a little bit more interesting. We'll just continue to do our thing. That's all we can do. We just control our risk, make sure we don't do anything silly, and just pay attention to what price is doing. Right. So there's still plenty of opportunities in these markets. I'm just squeaking out fresh highs. I'm not upset by any of this. It's all good. Silver's doing well. I mean, my diversified plays are doing really well. Uranium, for example. Let's see. Spot price. Yeah, I closed this one down yesterday for a small loss. I took the call side off. I had a call butterfly. I could have saved myself about $2 and change with the drop today. I think I was trading at $6.99 yesterday. I see a difference in my option chain about $2 to $3. But I ended up taking a loss, about a $900 loss, which was fine. It's versus like $2,500, $2,600 loss. So it was, like I said, a responsible thing to do yesterday. I took that trade off during the session. Uranium up a decent amount. I'm up, for over 10 grand, just holding some shares of URA. This whole, if anyone's been following, Oklo or some of the big players in the nuclear energy space, the stocks have been ripping like crazy. Uranium is kind of my way of trading it, and this has actually worked out pretty well. So let me take a quick peek here. I'm going to go into my Thinkorswim web platform. Oops, let me go back. All right. I'm going to take a look here with that URA push. Yeah, got some profits. Okay. Let's see here. Checking on my positions. I've got out of the money puts. I'm going to close that down. It's up around 330 bucks. Okay, what's this close for? Get out of here for 1 cent. Maybe so. Yes, no, maybe so. All right, not bad. Okay. All right, looking good. Let's see what else. All right, that's pretty straightforward. Let's see what's going on. Currencies, we had a big drop in the pound today. Kind of stayed there. We see the yen falling a little bit on the day. Not a ton of volatility here. 25 on the upside. Aussie was kind of bouncing around. Aussie on top. CAD next to that. Euro next to that. Dollars baseline. New Zealand getting a little bit of a bid here. Swiss and yen just below the baseline. Pound was the big loser today around the 2 a.m. open. So this would have been, I think that's the 8 a.m. UK open. I think. I don't know if they're six hours ahead of Eastern time or 5 hours ahead, but that should have been right around the UK Open or the London Open. But it's a noise in currency land. Let's go. Dollar, I think, is going to be range bound. I wouldn't expect there to be like a bigger push to the dollar unless something more dramatic happens. I think for the dollar to go lower, and this is a big correlation that usually doesn't happen. But if you have the dollar making fresh lows and you have the bond market making fresh lows, that rarely happens. But if that does happen, then maybe it drags the equities with it. But I think the dollar is, be careful of selling into these lows. I think the dollar is still going to be range bound, maybe chopping back in this like 101 to 102 handle. Oil, a rejection off this past level of support for now. Let's see how that stays. I mean, if this resistance stays, then we're still in like chop fest in oil. UNG, we did retreat a little bit. I'm still holding a diagonal spread in this one. Gold, it's fine. I think sideways at best. I don't think we're going to make a breakout move above 35. We'll probably just stay sideways. If we go to silver, really like how silver is behaving. There's a lot of upside potential here. I don't expect this to be just a runaway train. I said this morning. I mean, this could be a nice channel on silver where it's, swing, pull back, a little bit of noise there, but back up to the highs. If silver pulls back, to me, I think what the key, kind of bull case would be is that we hold this level of resistance. If this was resistance and it at best kind of pulls back to that level and shows another thrust to the upside, I think silver is in a very strong channel or a very strong bull trend. And my target 1 is 41. My target 2 is $48 to $49. And I'm going to ride this SLV for a while until it gets hit. So chart alarms are set, targets are set, profit targets are set. It's running uncovered now. I had covered calls that I got rid of last week for like a $50 loss, but I've got like 4,000 shares of SLV that's running with no cover. So hopefully that price appreciation is worth it. Bitcoin, just a little bit positive on the day, just fought back. Are we going to eclipse the highs again at 112 and change? Maybe a little bit more accumulation here near the highs, maybe a bull flag in some capacity. We'll see. I am in IBIT getting up some fresh highs. I'll keep an eye on this. So it's at 63.83. So see if we make some fresh highs there. Ethereum starting to get a catch-up trade. I'd mentioned this the last month or so. If you like this break of the trend line, this is a pretty good play in Ethereum to get up to those highs. So there is a trade. Your risk would be below the swing. If you've got a second entry, it would be anything in this pocket. Something where you enter small, build your position to whatever risk you're comfortable with. Stop loss is out below the low, and you're targeting these recent highs. So you're getting bigger profit potential on this swing trade if you like Ethereum. Copper, we'll see. I'm only taking. I took a nice little profit trade here on copper. Now it is a little butterfly spread. Japanese yen, no trade right now. Nikkei still watching. EWJ looking to see if we break some highs. This is the Nikkei 225 minus the bottom 15%. DAX and also I think it's what's my Euro stocks here? I got to look at the ticker. SXSE. What? Oh, dollar sign is XSE. Sorry, XSE. That it? Where'd it go? Is it X5? Anyway, Euro stocks. So looking at this, it trades pretty similar to the DAX. I'll just pull this index here. So Euro stocks versus DAX. DAX is up the highs. Euro stocks slightly different. Here's FEZ. This is what I trade. So I sold some puts down here on the April sell-off. I wish I would have bought the stock, but the way I'm participating mostly with this non-US is SCHY. From these lows, SCHY is up around 20%, 19.5%. So I've got some exposure there. That's doing pretty well. Let's see how those are collectively doing. SCHY up around $3,300. So I've got dividends, growth, and these are some inexpensive Schwab ETFs. I mean, they change the prices into the 20s. I'm like, I can allocate a couple hundred shares to each account, and it's a little diversifier play. So this would be non-US right here. This would be growth, which has about 200 stocks in it, so it's a little bit more expanded or diversified than the Nasdaq, and dividend. So a little bit more blue chip and lower volatility. But it's funny how this is not performing compared to the other ones. Russell, also up a decent amount, up around $13,500 on Russell. I'm still selling calls. I'm still just generating income. So we had a nice little pop on Intel today. I have a nice little $7,000 position running on Intel and have a bunch of shares. I'm not going to sell it yet. I think Intel, if it gets a run, I'm hoping this is going to be just like a beat up, kind of a beat up tech stock. Well, beat down tech stock, but it still has some potential to squeeze up here into the 20, 25, 26 handle. I'd love to see a gap fill here, like $28, almost $29. So let's see what's happening today on Intel. Strategies reduce headcount, streamline operations, concentrate on core engineering capabilities. Okay. Intel shares rally 8% afternoon volume hike. That's it. Like no real catalyst. It's fine. I mean, I look at the technicals as this is a good spot to buy. I mean, bear market lows in 2022. We came out of that, make some fresh levels. This is lower than COVID, which I was really surprised. That's why I was kind of hesitant on the stock in the first place. Is we're below COVID levels. Post 2020, we got to 2022 lows, had a nice rip to the upside. I participated in a lot of this right here. So a lot of this move, I was long Intel. I did take profit around that technical support becoming resistance. So I was fortunate to get out of here at a decent level. And then I started to buy back in right around the same lows. Problem now is we are sitting, buy back in around $25 and we're sitting here at, $20. So it's just selling some calls, lowering the cost basis. And I'm in profit, which is good. I want to see if this thing can squeeze back up towards like 26. I'm going to put a chart on here at 26. So check P&L on Intel. So if we pop up there and squeeze to 26, I'll take some profit most likely. A lot of these buy prices are at $21. So if I get $5 a share, that's not bad. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So it's $5,500, right? $5 a share. Yeah, not a bad little run. I'll take that pop. Could it go higher? Yeah, maybe, but I'm not going to hold my breath for, maybe a move to 27, 28 if I'm lucky. But I think 26 or higher is a good spot to look at it, maybe sell an in the money covered call to get it called away, but maybe collect a little bit more premium on those 1,100 shares. That wouldn't be awful. Lee says China talks could go into tomorrow, according to Finn. That's Financial Juice. Got it. Yeah, we'll see. We'll see. Okay. Let's see here. Anything else? Currencies, let's take a look. So Aussie, CAD, still looking to see if we can get equal level pullbacks, 382, 50, 618. I like all three of these zones to buy in. Aussie Swiss, I'm looking to see if we get up into this cluster and this 200 moving average. That to me is going to be a crown swing. So a 1, 2, hopefully a 3. If we get a nice little rally out of China and U.S. and this trade war situation plays nice, then I think the Aussie benefits from it. I think the New Zealand benefits from it. Those are direct ties to China. They typically do well in a risk-on environment, so I wouldn't be surprised at all to see Aussie and New Zealand do pretty well. In fact, Aussie dollar just hasn't really pulled back much. I mean, this is not how I trade currencies. I see currencies that do this. I see this working out one of two ways. Either one, just keeps grinding and grinding and grinding, and eventually just catches momentum and it just keeps going. That would be my least favorite trade because I'm probably not going to participate. Okay, the other side of that would be we just keep hitting resistance. We eventually make a quick breakdown, but then it's still bought with a nice swing opportunity to get back to the highs and then make its way to the trend. So you'd have a low, you'd have a high, you get an opportunity for a pullback here, and then this would be your target, your profit target. So I'm hopeful that's the case as far as trading the Aussie dollar. New Zealand dollar, kind of similar. It just keeps kind of running higher. Same thing, like it's just running higher. So I love a pullback into the same level, a pullback into the same area here, and then see if we can make our way up to some open space, 63.50 or so. That'd be my profit target. Okay, let's see here. CAD Swiss, same thing. Big cluster back here around 6,200, 200 moving average, same level. Any type of 1, 2, 3 to symmetry, 63, 6,400, I'll get out of this trade for some profit. CAD Yen, your chance was to participate in August. That's it. A couple hundred pips to the upside. Swiss Yen, nah, I don't like this one at all. Euro Aussie, never got the pullback that I wanted. Euro CAD, dead sideways, just unbelievably boring, which is not, I mean, it usually is a currency that can break loose a little bit. If we do see higher oil prices, then EuroCAD will probably fall back down into some of these inefficiencies. Just don't be surprised if this like heads back up and finds the highs and then falls again. So you just got to be prepared for kind of the noisy spots in some of these pairs, like PoundCAD, EuroCAD can certainly do that. Euro Swiss looking a little bit better. I love me some Euro Swiss back up into 96 or 9,700. Euro pound, fine. Euro yen is fine. I mean, I'm not doing anything with it. But if we go, maybe there's some resistance here. Okay, maybe. And we just have a range. Okay, this is kind of the halfway point. And then you have resistance way up here. And you have support way down here. So halfway point, big resistance, big support. That's it. I mean, if you're jumping into the trenches and scalping it, okay, fine. But just be aware that we have some potential halfway point resistance in this range. What's your strategy regarding lot size choices, Ryan? Are you talking what asset class? FOREX, contracts with options, futures. I've got a video on my YouTube channel that could help kind of explain that, adding to winning trades. That's a YouTube video, my Keep It Seriously Simple series. I basically trade pretty small. I trade pretty small, and I allow myself the time and the prices and the flexibility to kind of work through positions and build my trade size up. So in a currency world like trading FX, I mean, I might start at like 50-cent pips to $1 pip, and then work my way into like a half a standard lot to a standard lot. If I really like a position, I'm really committed to it, then I'll build it up into like 2-3 standard lots. So that usually does pretty well. Options, I trade small. I trade small options. I'm usually like a 1 to 5 contract trader. Why? Because I like to trade a lot, and I take trades that I don't have to marry positions. I don't have to, cheer on a position. I hope it makes me money, or I cheer on I expect to make money when I place a trade. I place a trade based on mechanics, probabilities. Do I like the direction? Am I not trading direction? I just trade small, and I trade a lot. So if I'm, generating 30, 40,000 trades a year, my chances of being right on most of them, just based on simple probabilities, is high. So I don't need to trade super huge because I don't want to tie up all the buying power with so few trades. So I tend to trade small contracts, like just 1 to 5, and from there, just let the trades and the quantity kind of do the gains. That keeps my losses very small. It lets me shrug off any loss, and I just trade. I just trade through everything. Yeah. So for options, yeah, I would say I just trade small, and I trade a lot. I trade all different asset classes. I trade all different strategy types. But every trade that I place live is I'm expecting to win. And if I can turn something into profit, great. Sometimes I hold it all the way to expiration. Sometimes I don't. Sometimes it's very simple, like I cut the trade at the halfway point. Sometimes I let it go. I try to keep my levels out of the way. So when I do credit spreads, for example, or ratio spreads, for example, I let my line in the sand is like safe. It's like a safe level. I don't expect price to go above this level or below this level, and that's what I trade. So I trade some structure that way, but keep the trade size pretty small. I also keep the trade size small because I don't mind taking on shares either. If there's a stock that I'm like, look, I'm going to, like I talked about this morning on Micron. Micron is up to 114 bucks. I put this trade down this morning, and I also have a trade down here where if price is going to fall, I mean, if we have any ounce of volatility in Micron and this thing pulls back, then I'm hoping that I get filled on a ratio spread that is down here. It's a 62.50 by 60 ratio spread. So this is a +1 62.50 and it's a -2, and then a -2 at the 60. And I collected. I'm looking to collect about I think $3 on that trade, or maybe $2 on the trade. So I'm looking for an income opportunity, but I'm also telling the broker here that I'm willing to own shares at a $60 assignment if that happened. So I mean, it's a couple $100 of income. Fine. If I were to see the stock drop, I would be glad to own the stock and happy to own the stock and repair the stock and still flip it for a win. To me, that's better than trying to go, if I went like -10 +5, well, that's great that I can make, $1,000 on this trade. But if I got assigned on 500 shares, I don't want to tie up 500 shares at a $70 stock or $60 stock. I'm not going to tie up $30,000 to buy Micron. I'll tie up, $6,000, and I can flip it for a couple of bucks, because otherwise it gets a little bit messier where you're, closing out 900 shares for a loss, and then, it just gets messier when it's like you're still taking a loss and you're still going to keep the shares, and you have to make up for that hole you just dug because of the bigger trade sizes. So if I do something I'm willing to own, I do the same thing on credit spreads. If I do a, sell put and a buy put and price is lower, if the broker assigns me, if I want to own the stock, I'll just close out the put, keep the stock, let it get assigned, and then just calculate my break even and then add a covered call and try to flip it for a couple bucks. I've done that a bunch, especially if I believe the market is healthy enough and stable enough that I can repair the stock. So anyway, I hope that helps answer that question. All right, what else? Euro New Zealand. I was looking for a pullback into this like 94, 9,500 zone. We're probably not going to get it. Look for a support level here around this 144 to 200 moving average. There's a decent level of past resistance in here that could offer up, like this thing just grinds, maybe a higher low, and then off we go. That could be a really nice, reversal pattern / bottom right off this 200 moving average trend line. So maybe around like an 8,600, looking to get long Euro New Zealand wouldn't be too bad. Euro dollar, looking to see if we can grind up. I just missed that chart alarm at 1,500. So I'm looking to see if we can tap 1500. I'll probably just take the profit here. That would be another 70 pips higher. So that'd be closing out for over 300 pips in this trade, and I might just close it out. That could be next week with the Fed. That could be just more dollar flows. We'll see. We'll see. Pound Aussie. What was that pullback? I still don't think it was enough. Oops, that's not what I wanted. Fibs. So shallow pullback, 127, pulled back again. Yeah, I don't know. I mean, I was looking for like a 50618 swing trade, just didn't present, so no big deal. Pound CAD, chop suey. I was looking at selling highs here around 8,700. Pound Swiss still choppy. I still like this one, up into like the 1350 to 1400 zone. Pound yen, scalp it if you got it. If you like it, trade the high volatility on the smaller time frames. Pound New Zealand, same thing as Euro New Zealand, maybe finding some support in here between this 144 200 moving average. This has been pretty consistent for the last year and a half. This is December 2023, higher highs and higher lows. This thing's been doing exactly that. So if we get a move down to the 200 moving average, trend line break, starts to head back up, we could have a reversal pattern and still go back to recent highs. Pound dollar, I like this one less than euro dollar, so I'm not trading it. New Zealand CAD, I'm long New Zealand CAD. I'm trying to get a add-on trade back around 8,100. Hasn't happened yet. New Zealand Swiss, heading up into some pretty decent like 5,000, 50-50 resistance. This is another one that I'd love to see at least a follow through, like a 1, 2, 3, and try to get some profit up here in this swing zone around like 52 to 5,300. New Zealand yen. I mean, August was your chance to buy it. That's about it. New Zealand dollar. Kind of trading some open space. I'm hoping that there's a pullback here to go long. I don't know if there will be. I mean, here's what I would think. If you buy it small and you buy it small and you buy it small, you're probably fine to put a stop loss there, and most likely this will continue to go higher. So you can participate small where this is a fraction of 1%, fraction 1%, fraction 1%, adds up to maybe a total position of about a 1 to 2% drawdown. And you can also add more up here where your buy stop levels can help you make maybe 2 to 4% on the upside. So if price continues to go your way, like this is an easy profit target at 63 to 63.50. I just want to be flexible where it's like if price is going to pull back, give it a couple hundred pips of breathing room, and maybe we get filled at better entries. Okay, dollar CAD. Lee, I think you're asking about this one this morning. I just like it lower. I want to see like 34, 33, 32 zone. I don't really like where it's at right now at 37. So I would be waiting for lower levels. I would buy some dollar CAD down in here. Dollar Swiss, not much happening. I think we have, if it's not setting up now, I would say even if we poke the lows here, that's probably divergent, and maybe we have a squeeze. I think this is going to come right back into this pocket. So this pocket right in here, I will be watching, because if we end up going, on the, let's say we go down to fresh lows, but then we break this trend line and we go on the right-hand side here, well, that could be a grind right back up. Maybe back to 92, but I'm trying to get out here at this inefficiency. It's a nice little pocket trade. Dollar yen, meh, not that interested. The trade that I'm watching on the dollar yen would be if this thing breaks, if this is a left shoulder, head to neckline, right shoulder, if this is setting up like a big bear flag, eventually this could be a monster break to the downside. Maybe. I mean, if it is, 140 to 120 is the play. If you break 140, the target would be 120. That's a big space for the dollar yen. There would be a lot of ramifications for the yen getting that much stronger, or the dollar getting that much weaker. But I think that is not the trade I'm just forcing. I think this trade could also head all the way back up here and find resistance again. And you just kind of wait it out. So no forced trades here. We just got a couple more minutes. The market's ripped up here the last 5-10 minutes near today's intraday highs. Just watching this before we close out. So a lot of volatility the last couple of minutes. This is, you're looking at about a 0.2% move here. I mean, I guess it looks larger, but pretty quiet. I mean, we're up near the highs of the day. Okay, fine. CPI news tomorrow, pre-market, 8:30 a.m. Does the market have a positive or negative reaction? We'll find out. We've had some big reactions on CPI the last 6 to 12 months. It's been big gaps up, big gaps down, but price is usually looking to move. Okay, so let's see what sectors are doing today. Let's take a look at the heat map as we close up the session. Tesla's up a decent amount today. Eli Lilly's up today. I'm looking at the bright green. Some of the rough spots that are dark red. I've got ANET down in ANET down 3.44%. We got some financial sides really soft today. So Progressive Insurance is down. Travelers Insurance is down. Allstate is down. I mean, fine, hopefully. I mean, I don't know if they're like dropping off like crazy. Let's take a look at PGR. I've got a couple insurance plays in here. Good. Freaking drop, dude. Auto business exhibit strength. Will it fuel profits? Personal auto business. Yeah, because you're jacking up insurance rates like 50 to 100%. It's got to be booming when you're ripping people off. Let's see here. Insurance composite slid 0.7 last week. I don't know. Probably well supported at the 200 moving average. I mean, maybe an opportunity to buy the dip. I mean, these companies are incredibly profitable, and it's annoying because life gets more expensive with them just passing on policies you pay more for. You know, it's like it's against the law to not have insurance, basically. So anyway, I hate it. But that's the heat map. So insurance down a little bit today. Maybe some dips. I mean, I don't know. I don't really love owning a stock at $265. But if we're, I mean, same thing on CB. It's like, do I want to? I mean, down here at like 266 or 250, maybe. Progressive. Let me check something real quick as we wrap up today's session. Let's go PGR. I mean, this is what's scary. Earnings are growing just at a monster clip, trading way below estimated values. Their price to earnings is not terribly expensive. So I don't know. I mean, how easy is it? Is it do we just dollar cost average, and this thing ends up going up to 300 to 340? It's I mean, it's not like a crazy growth stock, but I mean, I would say since is this summer of 2023? Ugh, I mean, look at this thing. Since that correction of 2023, these stocks have been just monsters. It's up 157% for an insurance company. Maybe some range trading in here. Maybe some ratio spreads. Maybe it's not a bad trade. Let's look at it real quick, and then I'm going to jump into my pinch point masterclass. So let me go PGR. Take a look. We've got earnings on the 15th of July, maybe going out 66 days, maybe 100 days in this one to September. I wouldn't mind putting, I mean, the premiums just drop off so aggressively here. What's the low? This low's around 240. This low's around 228. I mean, anything in the 200s would be decent. I mean, that'd be a big drop. So 32% from the highs. I could probably get behind this trade a little bit if I do a 210 by 200 or a 220 by 210. It's a little bit better. I think I'm going to write this trade down for tomorrow. I've got the cash on some of these to do it, so I could own the shares. It tie up about 10 grand margin, 20 grand cash. I got plenty of cash to do it. So I'm going to write this one down for tomorrow. A 220 by 210. Okay, so let's do PGR 220 by 210. Looking at about a 250 credit. And it's a 9/19 expiration. All right, that might make its way into my Project Options Edge and some of my other discretionary trade alerts. All right, for today's class, I'll let you go, and we'll come back and do it again tomorrow. Remember, CPI news tomorrow morning, 8:30. Daily profit play in the morning, pinch point masterclass. Let's jump into class. We'll take a look at our scanner, see what we have popping up. Let me go into the scanner right now and give you a little sneak peek. All right, good. All right, let's find the scanner. There we go. So the list keeps growing. We were at 26 yesterday. We got 33 today. So we're going to have some new ones to price in. We'll take a quick peek because a lot of these have been. I mean, I've got the list here from like last Friday to yesterday to today, so we will kind of quickly take a look. We have some new stocks, which is good, so we'll price them out. All right, Pinch Point Masterclass students, I'll see you in just about 2 minutes. If you're here for the YouTube session, kindly hit the thumbs up button, like, subscribe, all that good stuff. YouTube.com/Chris Pulver, YouTube.com/Financial Wars. I've got some exciting stuff coming up. Pinch Point Scanner is doing good work. It's making my life a lot easier just finding some good income trades. We also have doing a trading battle with 8cap in, is it next week? No, next week. So next Wednesday during the FOMC, I'm doing a trading battle, trading live for charity, and then also doing a year one or half a year review in the next week as well. So, but good sessions. Look forward.